video. Today I am coming live uh, to you to cover one very important topic, and going to be a podcast style. I'm just not putting my video out, but I'm just going to discuss. If you can joining me live, what we're going to cover in this part one of it is, can retail investor beat returns generated by professional fund managers in stock market investing? And it's going to be part of the series. So I'm going to be making a couple of videos because it's a lengthy topic, but I just wanted to get started with this. So the topic we want to cover is, it's very interesting. Can retail investors like you beat the returns generated by professional fund managers in stock market investing? If you're joining me live from Facebook, YouTube, please put in the comment box chat hello and confirm whether you can hear me and my sound is clear. That'd be appreciated. Thank you. So I would be, requesting you all to be interactive and let's have some good discussion. This is going to be a podcast style. So I'm repeating the topic we want to cover is, can retail investor beat stock market? And at the end of it, I want to give you some easy steps which you can take away and actionable steps which can help you in your journey. So let's get started. So first of all, and what are the questions we're trying to answer in this kind of series, right? First is, do fund managers also beat the market? That's the first question you have to ask, right? When you give your money to the fund manager, let's say mutual fund, or and then they are helping you to invest, do they beat the market regularly? Have you ever asked? Have you ever checked that? I think that is the first question we try to answer. Then we're going to see, can really retail investors can beat the market and beat the fund manager also? That's where I'm going to share some steps. And also we're going to discuss, so what is the strategies one can implement? Okay, so this is with three aspects of it we'll be covering up. So there has been some recent study done by Morningstar, which is a kind of a very renowned stock market data provider, and also website Morningstar and S&P Global. They did a research on this and they came to a conclusion. And they did nearly 3,000 active funds they were trying to analyze, which are there on Morningstar, and they just had the analysis done and said only 47% survived and outperformed the average passive counterparts in 12 months. And this is through, I'm talking about 2021. Okay, so roughly half of them beat and half lagged. Now tell me that you're kind of tossing a coin where you have 50-50 chances that somebody will beat the returns which have been actually done by the headline index. Could be S&P 500, BSE in India, or it could be ASX XJO in Australia. So it's very interesting that you can't trust whether you're going to get the returns you're expecting when you hire these fund managers and give your hard-earned money. And hence, it is important to understand, which will lead to, the next point. What are the key points we should consider, right? What is the key points when I'm trying to share my view that I don't think so fund managers do the justice to the funds. And no offense to any fund managers. I've worked with so many fund managers. They're great. But there's some inherent challenges in the entire setup. And that's what I want to share. One is, when you give your money to professional fund managers, what actually happens? Do you understand that? That is, if you give the money to fund managers, they put in a pool, and the fund manager, based on his or her knowledge in the investing and what strategy they want to implement and what the fund strategy is, they would tend to invest. Now, who are the people who are giving the money? The people who are giving, majority of them are know-nothing investors, so they are not themselves fully aware of the direct investing. So they hire these fund managers, and they, in turn of the fees, they tend to invest. Now, most of them are also not mentally prepared to see the volatility in market, right? And fund managers are also kind of have to, weather through those volatilities of the market plus volatility behavior of the investors who are coming in and pooling their money. So one has to keep that in mind. So that also kind of creates some kind of challenges for the fund managers to apply the strategy fully. Second is that when you are looking at the fund, right, they're not fully agile. So they have their own processes. Like in terms of when they want to invest in particular stock, they have to look at whether it's a mid cap stock, large cap stock, or a small cap stock, and what is the price of the stock. If the price is certain threshold below, they're not interested in the stock. And as a retail investor, if you learn how to invest, you can do a better advantage position, so you can front run those fund managers, not per se front run by doing some kind of internal information leak, but by understanding various other approaches which can give you an edge in the market, which I will talk a bit later. So these are two of the things mainly which I talked about is the key points you understand. The fund manager is not very agile. They tend to take longer process. They have the big funds, so they can't just simply invest in any stock. Whereas a retail investor, you can invest in any stock because you have, if you understand how to invest and how to build your portfolio, you have more bigger ability and opportunity to invest. And second is that fund managers or professional managers also have to align with the volatility market plus also volatility behavior of the individuals who are not sometimes jumping in at the peak of the market and try to exit when the low of the market where fund managers can't really apply their strategies fully. So with that, I lead to next segment of our discussion. What steps, and these are the steps we will discuss, several other steps as well in next video, but I'm going to share 3 steps for you to start working with it. The first step, one has to, and these are broader steps, so there might be multiple steps within that, but just bear with me and stay with me on this point. And if you have any questions, put it in the comment box below. I'll be more than happy to answer that, right? So think and act like a fund manager or professional investor or smart investor, whatever you want to call it, name it, right? As a retail investor, one has to start building the mindset to think, act, and behave like a professional investor, smart investor, fund manager. Once you in that zone, and what does it mean? It means that break all the myths. There's so many myths in the market that I don't know how to invest. Too complicated. It's a gambling, blah blah blah. There's so many other discussions keep going on. Get out of the myth, and you need to develop the right mindset of buying companies, not prices. People get attached to the prices like crazy. They look at the prices every time you buy the stock and you start looking at the prices, but that's something one has to completely go away. That's the wrong end of your process which you're picking up. So you need to start studying about the businesses and only businesses. Try to understand, look at the behavior of the prices over long period of time, minimum 10 years. Pick up those stocks and look at that. Then you will understand the whole uh, then you start moving in the right direction and start asking yourself the right questions, right? Because if fund managers were so professionals, why they put in like 20, 40, 50 stocks in their portfolio, right? If they know everything about it, then they should also hold 5, 6, 7 stocks, right? Why they have such a big portfolio? Thing is, nobody knows the tomorrow of stock market. What you have to do is you follow your own process, and that process should help you to manage your risk first, not the gain. People tend to say, oh, I need to have, how can I double the money? But you should ask, how can I invest and not lose money? If I'm losing, it should not be big loss. right? So that's one thing one has to look at it. So developing a mindset, and that could involve having developing the patience, the right, right fundamental inherent of you as an investor, what type of investor you are in. I'm talking about that. I've not gone into the steps of how to do fundamental analysis or technical analysis and so forth. It's just about you and what are the right mindsets you need to do. That's the first step. Step number two is about now going into technicalities of it, which involves understanding the company details, fundamentals of it, different ratios, balance sheet, profit and loss, cash flows, and so on and so forth. And that is, don't get overwhelmed with all that. It's just some of the key aspects of it which you one has to focus on it. Second is you, what is an edge for you against others? As I mentioned to you, most of the fund managers tend to do a lot of study about the business. Very few go into technical analysis of the, which is basically price action of a particular stock. When, what scenario the price fall and when it reverses, when there's every 10 years there's a crash comes in, how do you benefit from that? All those things will lead you towards where, as a retail investor, you will start getting a hang of it and saying, okay, these are the, these are the ways one can implement in long-term investing. So a lot of people use technical analysis for short-term investing, and very few are one who are using the technical analysis for long-term investing. And that's what I'm focusing on as part of the Peaceful Weekend Investing. And if you're new to my channel, I would request you to subscribe to my channel, hit the notification bell, and you, if you liking our content, give a thumbs up. And if you have any questions, put in the comment box below. I will definitely respond to you back, to my best of my abilities, right? And apologies, I'm not live with the camera on. I'm just making it a more podcast style so that it's easier so anybody is watching this video over just listening it while walking or while eating food. Then it also helps them rather than focusing on the screen. And that is just so that it helps them on that journey as well. They can just walk and listen to this so-called video cast. And so yeah, learning technicals, learning fundamentals, try to see how you can blend them both in terms of long-term investing. So that's another one. And step number three, and it could be simple but very, very, very difficult to implement. Let me tell you this. Stop looking at the business news channel and never ever look at prices when this market is live. So there are two of them here. You don't have to listen to the business news channels because that's where you get tempted to buy, because most of the, in a day, I don't think so how many recommendations will be coming through your way and you will fall into a trap. So you should filter that down, possibly, given these days we have everything on YouTube, everything on Google alerts. You can basically skim through that information what you need by let the information flowing you with filtering based on your requirements, rather than just going out and browsing the business channels. And don't look at the prices when the market is live, because that's where when you get excited about seeing all the flickering on the prices, and that could lead to scenario where you tend to either buy or sell stocks which you probably don't want to do that without doing a proper analysis. And hence, these are three key points, and I'll be coming up with another video where sharing more thoughts of that. Hope you're liking my content here. Do drop a note if you're getting value out of this video, so that helps me to understand what I can share more and what are things which um, can be useful. I'm here to only with one clear objective, to make you a better investor and make you informed investor and make you smart investor. And the Peaceful Weekend Investing community is all about that. And if you want to join my community, and it is completely up to you. But if you are interested in joining in, you can connect with me to one of my channels through just log into sbhatia.co/bio, and you will find all my coordinates to get connected. And if you want to join me live, you can sign up on sbhatia.co/live, and you can be uh, joining with my live webinar with 90 minutes pure learning we're going to do of how you can beat the stock market. So these are the two coordinates, and I want to leave this with this video with these thoughts, these three key pointers. Let's recap what we covered. One is that we covered about what are the different recent surveys we discussed about it, that 50-50 chances that a fund manager would have beat the returns last 1 year. And one has to look at it, some of the inherent challenges on the um, investing through the fund managers. And some of them are because they're not agile, and they end up also falling trap in terms of volatility of the stock market, plus the volatility of the investors who are there, because they tend to buy on top and sell it in the bottom. So plus in terms of they don't do more of technical analysis, the exits are based on fundamentals that are too late in that game. So these are some of the inherent challenges you're buying in as you invest, and hence you see the result that they are not able to beat the market. And so three clear steps which I share with you: think and act like a fund manager, a professional investor, or smart investor, and develop that mindset, patience, what is required, and break all those myths. Step number two is develop all those strategies, understand the fundamental analysis, understand technical analysis, try to blend them both for your long-term investing, and develop those skills which can give you an edge in the market. And step number three, never ever trade in the live market or look at the price in the live market. Always and always look when market is closed, and stop looking at the news channels or the business news channels, which are basically can take you in a wrong path. So with this, I want to sign off from here. Connect with me on my bio. If you're liking our content, give a thumbs up. And this is Shivendra Bhatia from Peaceful Weekend Investing, signing off today, and see you in yet another video tomorrow or day after when we're live again and continue this discussion. Till then, thank you. Bye-bye.